has announced a new foreign trade policy setting an ambitious target of $2 trillion in services and merchandise exports by 2030. For context, the Commerce Minister Piyush Goyal has projected India's exports in FY23 to touch $750 billion. This is below the $900 billion target set for 2020 in the last trade policy. The government has repeatedly extended the target, citing pandemic-related disruptions for missing the deadlines. Now, the new trade policy aims to nearly treble the exports from current levels to $2 trillion. That's by 2030. The new foreign trade policy hopes to provide a fillip to emerging industries such as e-commerce, drones, chemicals, among others. Abhimanyu Sharma is joining us now with the highlights and the key takeaways from the new foreign trade policy. Abhimanyu.
The new foreign trade policy will have no end date. It will be updated as per the requirement of the situation. Also, it is a apart from the fact that several other salient features of the policy are directed towards easing business for exporters. Also, an amnesty scheme for one-time settlement of default and export obligation by advance authorization and EPCG authorization holders has also been promised as per the scheme. The application fees is to be cut for MSMEs for advance authorization and EPCG schemes. Faridabad, Moradabad, Mirzapur and Varanasi have been declared as towns of export excellence in addition to the existing 39 towns. Battery EVs will be eligible for reduced export obligation requirement under the EPCG scheme. More importantly, international trade settlement in rupee will be allowed not just with countries with which India has a good bilateral trade relation, but also with nations which find it difficult to get dollars to pay for their respective imports. So clearly it will be a big fillip for rupee trade, even as the government is trying to pitch the rupee as a global currency. While battery EVs will be eligible for reduced export obligation requirement under the EPCG scheme, the threshold will also be decreased for export performance star ratings for exporters for better branding. Clearly, exporters for now have been welcoming this new policy, though many exporters have said, FIEO has told CNBC-TV18 that they do want some extension to the old policy, since they do not want several exporters to face losses due to a sudden change in policy, and they want some degree of interim extension to the old policy to ensure that there is no break in business for various exporters.
इस वर्ष 750 तो पार हुआ, शायद 760 भी पार होगा, यानी 13-14% ग्रोथ एग्रीगेट में. किसको ऐसा न लगे कि हमने कुछ छुपाने की कोशिश की है, तो ये भी कह दूं कि गुड्स में भी अच्छा ग्रोथ है. $1 ट्रिलियन गुड्स और $1 ट्रिलियन एक्सपोर्ट्स हम 2030 तक करेंगे. याद है ना ये तो? कोई भूलना नहीं भाई कभी भी. उस समय एग्रीगेट इस वर्ष का 772 बिलियन एक्सपेक्टेशन थी, और मेरा मानना है हम लगभग उस लेवल तक पहुंच जाएंगे जब तक फाइनल आंकड़े सब SEZ, EOUs, सर्विसेज सबके आंकड़े आएंगे.
This policy has been made like this, that slowly we have to come out of the incentive and the subsidy regime. That slowly we are graduating. Our MSMEs are graduating on that. Now government is going to give only the remission of the duties and taxes, and that should be the order of the day. So if that happens properly and seamlessly, I think the business is bound to grow now.
Ways and measures in which e-commerce export can be facilitated, those have been provided for in the foreign trade policy. As on date, we have announced that consignment-based cap of 5 lakh for courier-based e-commerce is going to be increased to 10 lakhs. Similarly, we have also extended FTP benefits to e-commerce exports.
Well, to discuss this further, we are now joined by Mr. Jayant Dasgupta, former Indian ambassador to the World Trade Organization, as well as Mr. Ajay Sahai, Director General and CEO at the Federation of Indian Exports Organization. Gentlemen, thank you so much for joining us. Mr. Sahai, let me come to you first. Let's discuss the headline numbers. Mr. Goyal there referring to the target for FY23 to be about $750 billion, shy of the $900 billion target that we'd set for ourselves in 2020. The question I'm asking is, how feasible is the $2 trillion target for 2030? Can we achieve that? It implies a compounded annual growth rate of 15% every year for the next 7 to 8 years. How feasible is that target, Mr. Sahai?
No, I think target is well within the reach. In fact, still we will be clocking around 13% growth in the entire export segment despite the global headwinds. And that's why I feel that as the government is now focusing on the new segment of export, be it SCOMET item, be it e-commerce, and also they are using district as an export hub to have more granular approach towards exports. These targets are definitely achievable. What is more satisfying for me is that despite all these challenges, we have seen over $100 billion growth in export in financial year 2022-23, which means that 40% of the additional GDP growth has come from the exports. And when we are seeing such uncertainty in global trade with high inflation, the now increasing interest rates, these are very good indication. And I'm pretty sure the kind of focus which the new foreign trade policy has brought on the new sectors and increasing their reliance on digitization to address the transaction cost and time issues, this will definitely help us to achieve the target of $2 trillion. And we are confident that probably we may do it a year or two before also.
Let me ask then a follow-up question, Mr. Sahai. One of the key takeaways here as far as the new trade policy is concerned, there's a clear shift from incentives to remission. That's a very clear indication the government has given. The question I then want to ask is that the recent surge that we have seen in exports has largely been account of domestic incentives such as the PLI scheme. We've seen mobile exports, they've done really well. How sound is this approach to replace incentives with now remissions?
No, in fact, I think it's an extremely sound approach. You have referred to the PLI scheme. Please bear in mind that PLI scheme is for a definite objective. So if the subsidy is with a definite time frame for a certain objective, it is quite understandable. The government has helped the export sector also when these kinds of subsidies required. We are also now aware of our requirement which is mandated under the WTO. We have reached the threshold limit of $1,000, and that's why we have to bring our policy which fits into the WTO discipline. And therefore, as a long-term roadmap, we have to look into the competitiveness of industry, look into the non-fiscal support which can be extended. And that's why I'm saying that if the government can address the procedural issues of the export sector and while continuing with the zero rating of the export policy, this itself will help to provide a lot of competitiveness to the exports. And we are very clear that the days of subsidies are over now for exports.
Right. Mr. Dasgupta, let's also get you in on this conversation. We're now looking at a situation where we are looking at trade settlement in rupee being allowed. This, of course, being again one of the landmark takeaways as far as the trade policy is concerned. Tell us, when we look at it, when the audience looks at this development, how best should we understand, how best should we decode what this means in terms of its significance?
The first thing is that there are a lot of countries which are facing currency shortages in terms of hard currencies. And in order to provide them with the benefits of imports from India, we are extending this facility. Now, the issue is they will have to pay in terms of either, let's say, barter trade for certain countries from which India has been buying traditionally, or they could pay us in terms of their own exports to India, or in terms of a third currency. So overall, I think this will benefit and open up new markets for India. The facilitation to trade in Indian rupees, because Indian rupees, if they have certain other currencies, not dollars, with which to buy Indian rupees, there would be a facilitation for that. And if they are, for instance, selling primary products to the rest of the world, they can utilize the proceeds of that to use that to pay us in Indian rupees. So overall, I think it's a very positive step.
Sure.
And the predominant position of the US dollar and a few other currencies, if I may say, so that is under threat. Sure. And as we speak, there is apparently a negotiation going on between Brazil and China to designate their trade in terms of the two currencies rather than dollars for certain things.
Sure. Mr. Dasgupta, let me then ask you a follow-up question. You mentioned making inroads into new markets. Whenever you talk about trade settlement in rupees, you're looking at the conventional markets such as Iran, such as Russia, now even Sri Lanka. What are some of these new markets that perhaps could open up with trade settlement in rupee terms?
Our exports to Russia, for instance, are not very high. If you look at the figures, they are rather, I think, disappointing. But of course, we have been now importing a lot of crude oil from Russia. But there is a tremendous scope to export a huge basket of things to Russia, because the Russians would also, not be able to buy the same thing from, let's say, Western Europe or the US or Canada. So this provides us with an opportunity to provide the kind of products that the Russians need. And it's a very large market, about 13, 14 crore people with enough resources. So this could be a very beneficial kind of a thing. The second aspect is trade with Iran, for instance, which has been going on, but on a very low key. Sorry. So these are some of the countries. Of course, we have extended our lines of credit to Sri Lanka, and we have a very steady and burgeoning relationship with all our neighbors, including Bangladesh, Nepal, Bhutan. So we could extend this same facility, and this would be beneficial for both the sides. It could be a win-win situation of trading in Indian rupees.
Right. Right. Mr. Sahai, let me come back to you. In terms of takeaways, there's one clear thrust area towards e-commerce exports. The target has been set at somewhere in the neighborhood of $200 to $300 billion. Shipments, the allocation for that has been increased from 5 lakhs to 10 lakhs. Just your sense as to the growth that is expected in this space as far as e-commerce and the push that is being given by the new trade policy.
The new foreign trade policy clearly recognizes the potential of e-commerce. Our current e-commerce export is in the range of around $25 billion, and we feel that we can have a 5x multiplier in next 3 years or so. So from that analysis, I think $200 to $300 billion is extremely achievable target. I'm pretty sure we will be exceeding those targets, because if you look into the Indian startups who have come, a lot of e-commerce exports are being generated even for tier 2, tier 3 cities. And that's why the foreign trade policy, which is looking into increasing the value limit from 5 lakhs to 10 lakhs, and they are open to even removing the limit, is extremely welcome. I think what I'm looking towards the foreign trade policy is the new concept of the e-commerce zone. This is something which we have also proposed. The idea is that all the agencies dealing with e-commerce, be it bank, fintech company, courier company, foreign post office, customs, tax authorities, all can be located at one zone. And that zone can have little space for the warehousing and some minimal operation like packing and repacking. We have seen that some of the countries who have set up these kinds of zones have been benefited from that. And when we are talking to some of the e-commerce large players also, they also have a huge country-specific target to increase procurement from India. So from both these perspectives, we are quite confident that we will be achieving whatever is the target projected for e-commerce. And I think we are all set to have a compound annual growth of 40 to 50% in e-commerce retail exports.
Mr. Dasgupta, I'll just come to you for the final word. We're running out of time, so a brief answer from you, a request for a brief answer. The question is that of a massive outreach program in conjunction with the Ministry of External Affairs. Can you give us a sense as to the contours of this outreach program and how perhaps India can go about it as a part of this new trade policy?
The thrust that I think this foreign trade policy has been talking about is about engaging our missions abroad in important countries, in countries which have the potential which has not been exploited fully, to absorb our exports, to find out avenues of business. And it need not be just one-way business. It could be two-way business as well. So it is a much more active role, and perhaps, giving certain kinds of targets, which may not be physical targets, but other kinds of targets to access these markets and to earn a foothold there. and to increase our business and opportunities of expanding our business there. So that is the thrust, I think, which is being been hinted at
Right, Mr.
in the foreign trade policy.
Right, there you have it. That's the big takeaway here as far as the new trade policy is concerned. Target of $2 trillion by 2030. I'd like to thank both of our panelists for joining us. Mr. Dasgupta, Mr. Sahai, thank you so much for joining us and sharing your perspective with us. With that, it's time now to slip into a very